We want to go around the horn. Ali, let me throw it over to you first. What'd you give?
Okay.
The entire season.
You know what? I'm going to be positive. It's Friday, baby. I'm going to go with good overall. And the reason I'm doing this is because I think this earnings season, we saw there was a strategy of efficiency. The word efficiency was mentioned multiple times on various earnings calls, whether it be cost cuts, layoffs, reorgs. This is something that we really saw virtually across every single sector. Of course, I think it affected tech probably the most. And it is sad to see people lose jobs, but I do think these changes were needed in order for a lot of these companies to get to that solid place in terms of profits, especially after the pandemic, and really recalibrate some of those losses. So I'm going to go with good.
Good. Okay. Mine wasn't really on the meter, so we had to kind of make a new category for my read of the quarter, which was meh. If you want to spin it in another way, I would say solid, not spectacular. Those are kind of the same thing to me, but I go back to where it all started. It started with the big bank earnings. Just about every single CEO coming out and predicting a mild recession, seeing a cautious consumer. Basically what happened this quarter is we lowered the bar and we're able to barely leap over it. That's a rule I've been living by pretty much my entire career. It's all about how you set your expectations, right? I remember when I walked into that movie, Thor, Love and Thunder, I expected Ragnarok. I got garbage. So it's really about where you set the bar. Last night, guys, I watched the movie Lost City. I expected nothing very special. It was outstanding. It easily went over that bar. So it really is where you set expectations, which really they were lowered enough that a lot of companies could just barely leap over.
So it sounds like you're right on that bar with the meh.
Meh.
Meh. All right.
Meh.
My takeaway, my vibe check is that it was bad, and it's all because of the consumer, a theme that we have been talking about now for weeks and weeks and weeks. We heard it from a number of the retailers. Nordstrom was one of the companies saying that we expect elevated inflation, rising interest rates to continue to weigh on consumer spending, at least through the first half of the year. Very similar to some of the comments that we heard from executives, including Macy's, Kohl's, Target, even saying that they certainly have seen a shift in how consumers are spending. So from that perspective, from that angle, it was a very bad quarter. Josh, what about you? Upbeat?
I went with the worst. We're ending on a bad note. Sorry, I went ugly, guys. And it gets to what Dave was talking about when you think about expectations. Earnings expectations for the next quarter, when we're going to be here in a couple months talking about this again, are still declining. And I think that's something that you want to highlight. And then also when you think about the banks and what's going on with Silvergate and some of these companies, it just seems like there's been a lot of bad news over basically the last week now. You can see Silvergate here down 85% year to date. Not some good news in some of the banking sector. Also, it seems like we're going to get more interest rate hikes coming, maybe for longer than we expected. Hasn't been that good for the market thus far. Maybe won't be. Hate to end it on a sad note, but
it certainly has
feeling
not
a little
been.
grim out there.